Hey John, this is Ryan with TrendLizard.com. We are taking a look at UA on Under Armour, one that we have looked at before. Per the last discussion, the data that we have on Under Armour only goes back to 2016. I think there was I can't recall exactly why the data is so limited, but what we have is fairly clear, and this is the exact same labeling we used last time. It looked like a big 5-wave down move completed in March of 2017. At that time, I'd said looks like a larger recovery was going to occur, and since then it really has put together a pretty nice recovery, pretty notable in June, other than today actually when it lost 3.6% over the course of the session. So that's interesting. There's certainly the potential for additional strength. I think, as I told you last time, the potential is to go up to about 28 to 35 in what is likely a counter trend move. So that's kind of the rub right there. Let's zoom in and take a look at this action here to show you why I'm thinking that. It's just been a huge choppy mess basically since the low has occurred, so which occurred right here. This is not the stuff of trends. This is not how trends begin. So obviously things have become a little bit more interesting more recently and a little bit sharper, but it's really hard to get behind this guy with the way it started. So I guess the catch is maybe something like this happened where the 5-wave decline actually ended in May as opposed to a March when I believe it ended. This would be a truncated low. If you're familiar with that term, it just basically means the actual low wasn't the lowest low, which was actually back here in March. Unlikely, and suddenly it feels like we're trying pretty hard to justify a way to get into UA, and that's really not how I prefer to trade. I try to find things that are super clear and trade those, and not try to make excuses that allow us to trade, which is what this feels like. So if we go back to the shorter term chart, basically this chart here would indicate that the low occurred here in May, and this is the start of something trendy. So I think I personally would need to see more proof that something like this was playing out. It does look like this recovery that began in May is probably going to continue. The best level that I can offer you is 1915 as the level that price cannot go below to wreck this thing. But personally, what I would want to see is the completion of a trendy move and a larger pullback that sets up the next up leg before I would want to buy it myself. Otherwise, we're just buying into something that looks counter trend just because of what's happened here from March, April, and May. So it just doesn't look like the start of a good trendy move. Certainly, once again, it can continue, but who knows how it's going to go about that. I mean, counter trend moves kind of go all over the place, so it's a little bit of a risk if you're trying to trade this move up into the yellow area, just because it would be a counter trend move and it can swing back and forth, upside and downside in every which direction as it gets there. So I hope that's helpful, John. I've got one more coming your way in just a minute. Thanks.